Welcome to Flippening, the first and original podcast for full-time, professional, and institutional crypto investors. I'm your host, Clay Collins. Each week we discuss the cryptocurrency economy, new investment strategies for maximizing returns, and stories from the front lines of financial disruption. Go to flippening.com to join our newsletter for cryptocurrency investors and find out just why this podcast is called Flippening.
Clay Collins is the CEO of Nomics. All opinions expressed by Clay and podcast guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions.
Hi, this is Mike, producer of the Flippening podcast. We'll get to Clay's conversation with Bradley Miles and Sid Kalla, co-founders of Roll, in just a moment, but before we do, I'd like to lay the groundwork for this interview. Roll is an Ethereum-based platform that lets influencers, content creators, and others mint social money to incentivize and reward their communities. Thanks to Roll, social money economies are springing up across categories as diverse as digital art, ASMR, and online entertainment. Individuals have even used Roll to tokenize themselves, enabling believers to invest in their social capital. The conversation is split into 5 chapters. Chapter 1 is a brief intro to Bradley, Sid, and Roll. Chapter 2 is a deep dive on social money. Chapter 3 is a walk through the Roll setup process using our own NOM token as an example. Chapter 4 covers the prehistory of social money. Chapter 5 looks at operations at Roll and the future of social money. Transcript and show notes for this episode are available at flippening.com/roll. That's flippening.com/ROLL. We'll get to the episode in just a second, but before we get started, here's Clay to tell you about our awesome friends and sponsors.
This episode is brought to you by the good folks at CryptoTrader.tax. Here's 4 things you should know about them. Number 1, CryptoTrader.tax automates the entire crypto tax reporting process and has partnered with the TurboTax team to bring cryptocurrency tax reporting to the mainstream. Number 2, CryptoTrader.tax offers a complete tax loss harvesting module to help investors figure out their greatest tax savings opportunities to reduce their taxable income. Number 3, CryptoTrader.tax supports all fiat currencies, meaning users from all over the world can use the platform to calculate their gains and losses in their home fiat currency. And finally, number 4, CryptoTrader.tax offers a suite for tax professionals to help them manage their cryptocurrency clients. While I'm not a CPA and I'm not qualified to provide tax advice, I should note that I personally advise my family to never just hand over their exchange history to a CPA. Instead, I encourage them to let CryptoTrader.tax analyze their trade histories, find the tax calculation method that's best optimized to save them money, and then submit summary documents to their accountant. This saves you from having to pay your accountant to do the tedious work of generating Form 8949 and other similar forms. Creating an account and importing your historical data is completely free. You only pay when you want to download your tax report for the year. Just tell them that Clay from the Flippening podcast sent you to get a discount on your tax reports. So go to CryptoTrader.tax today and sign up. And again, let them know that Clay from the Flippening podcast sent you so that they know that these ads are working. This episode is also brought to you by the good folks at Nexo.io. Here's a word from them. Nexo is the only lender offering instant crypto credit lines, which let you use digital assets as collateral to get cash in 45 fiat currencies and stablecoins. You might remember Nexo from episode 64, where we spoke with their co-founder, Antony Trenchev. If you haven't heard it, I highly recommend checking them out as it's one of our most popular episodes to date. And Nexo has a big announcement related to credit lines. Their annual interest rates for credit lines are now starting at just 5.9%, which may very well be the lowest borrowing rate in the entire industry. Nexo is also a strategic partner of exchanges, OTC desks, and crypto funds through its portfolio of structured financial products. Institutional counterparties can earn up to 8% annually on their idle stablecoins, enter into asset swap agreements, or directly borrow crypto. Individuals can also park their cash in stablecoins at Nexo's interest-earning account to get an annual return of 8%. What's more, interest is paid out daily, and you can add or withdraw funds at literally any time. So if you're looking to borrow, lend, or swap digital assets, Nexo is your go-to partner. Definitely explore Nexo.io. And if you're an institution, reach out to them at institutions@Nexo.io. Finally, this episode is brought to you by the Nomics API and CSV data export service. If you need an enterprise-grade crypto market data API for your fund, smart contract, or app, or if you need historical CSV dumps of trading data or crypto market cap data from top exchanges or even obscure ones, then consider trying out the Nomics API or our historical data export service. Our cryptocurrency API enables programmatic access to clean, normalized, and gapless primary source trade data across a number of cryptocurrency exchanges. Instead of having to integrate with multiple exchange APIs of varying quality, you can get everything through one screaming fast fire hose. And if you'd like to order historical cryptocurrency market data as CSV exports from top exchanges, then email us at sales@nomics.com.
Okay, back to our regularly scheduled program. Here's Clay's conversation with Bradley Miles and Sid Kalla, co-founders of Roll. Enjoy.
Let's start chapter 1 and dive into how you guys got into crypto and the inspiration for Roll. We'll begin with you, Bradley.
Awesome, Clay. Yeah, so happy to be here. Bradley Miles, co-founder at Roll. Been in the space for over half a decade. Started professionally as a founding researcher at CoinDesk. So a lot of my job there was architecting the research products they had, largely the State of Blockchain report, sort of a massive report for everything that's happening in the space in a given quarter. Started doing that in 2015, 2016. Ethereum forked and did a huge piece on Ethereum Classic and what was going on there and the difference, and just sort of a brief sentiment analysis and how the markets thought about everything, and really never looked back. Prior to getting into this space, I was actually on the other side of the table as an investor and was working for a late stage firm, and they weren't too up to date on digital currency. This was around early 2013. And basically, I was tasked with finding out everything about what was going on in the space. So naturally, that just led to learning more, and all roads there kind of led to CoinDesk, which I worked at after the firm. And we all became really fascinated, and Sid can talk about this more in depth, of this idea of the economics of the web really bending more towards creators and their communities. And we really wanted to take this to a logical extreme, right? What if creators and their communities owned all of the economics and had all of the power? We sort of saw this as a last mover platform, and that all of the applications after this instance would need to replicate communities in that context. And this became Roll. So Roll, in effect, is a protocol and a web app that allows anyone, anywhere on the web, to create, use, and distribute their own social money. A new concept to them, but really under the hood, branded ERC20 tokens. And I'll let Sid take it from there.
So Sid, let's transition to you. Would love to hear a little bit about your background, and then also how you and Bradley met up and decided that this is the thing that you were going to kind of dedicate your life to, at least for the next several years.
Yes, I've been a researcher and writer in this space since around 2013. So written for several publications, including Smith & Crown, CoinDesk, American Banker, and a bunch of other places as well. So a large part of what I would do was kind of digging into the crypto economics of specific tokens and protocols that were coming out. So this was even before Ethereum, where in order to launch something like this, you kind of needed a new blockchain. So kind of studying everything from the characteristics of the token to voting rights to governance to just helping people understand this space. And before that, I had my background in finance and technology. So I actually started my career as a software developer at Bloomberg. So I was in their trading solutions team there, kind of building up compliance solutions for mostly for the buy-side asset firms. It was kind of a very natural progression for me where, the first time you hear about Bitcoin, it's just one of those moments where you can't sleep for 3 days kind of thing. And just dove right in. And after Ethereum came out and some of the interesting projects that we were seeing in this space, it didn't make sense to stick with the traditional financial world anymore. And met up with Bradley, my co-founder, and started Roll. It was a much smaller space back in the day. And there were only so many people kind of doing some interesting things, especially on the research side. And we were both writing for CoinDesk. And Pete Rizzo, who was the managing editor of CoinDesk, had just built CoinDesk into this whole big thing that you see today.
Hi, this is Mike cutting in from the editor's booth to note that there's plenty more on those early days in Flippening episode 76 with Pete Rizzo, covering the origins of CoinDesk, where Pete was editor-in-chief, his current role as editor-at-large at Kraken, and why the coming generational wealth transfer is good for Bitcoin. Find it at flippening.com/Rizzo, Rizzo. Okay, back to Sid.
Yeah, he was the one who actually introduced us to each other, and then there's no looking back from there.
So Pete connected you, was that at a conference or by email? Was it in person? How did that work?
I think at that time, actually, I was in London and I was traveling to New York for work. And so one of the, CoinDesk used to have this office in a WeWork near Times Square. And I think that was our first formal introduction.
Maybe let's transition a bit to social money and the founding of Roll. So, I think social money is a term that I think I understand a bit, but when I heard it for the first time, it was hard for me to kind of really grok what social money was, what was social about the money. I think I definitely understand putting content creators in, sort of allowing them to control their own destiny, but let's maybe start at the top of around social money. So what is social money? How does it work? How is it different from other types of money that might exist? And maybe, Bradley, I'll hand this one to you.
I think you can start by thinking of this cultural primitive that's around, or societal primitive that's around, over 100 years old that we all kind of understand as social currency, really the value of a community on and offline, let's say. And as Sid and I really thought about this, we really saw with the current set of technology tools that we have, that there's no reason this shouldn't be translated into both a digital and financial primitive. And so we kind of took this cultural primitive and turned it into a digital financial primitive, which to us warranted a new name, and that was social money. We chose those words in particular, partly because of the mission of Roll is to onboard massive audiences to Web3. You can say that the purpose of DeFi is really to build, bring financial infrastructure to Web3. The purpose of social money and Roll is really to bring community ownership to Web2. We want hundreds of millions of people interacting daily through their social money and the social money of others. And to do that, a lot of the terminology needs to make sense. The very first person that issued social money on Roll actually has no other reference point with Ethereum or blockchain in general. Her name is Laurel, and Laurel is an Instagrammer and TikToker that I met at VidCon.
Nice. And
so Laurel was on a panel, and she actively, works in the ASMR space. You guys may know that from, some folks kind of whispering into the microphone and giving you this tingling sensation in your spine. So after I talked with Laurel, it was very clear that she hadn't held Bitcoin. She hadn't held Ether, but she was very fascinated by this concept of owning her own community online. And this is what got her sold on the idea of minting her own social money, which she calls Tingles. And to this day, there are over 500 different people across the web or more that hold Tingles. And similar to how people online have their own presence, we see these individuals also having their own digital nation, right? Maybe that nation has its own culture of fan behavior. Maybe it has its own language with memes and GIFs and inside jokes. Why shouldn't it have its own economics? And this is the purpose of social money. So Laurel distributes Tingles on Instagram. So you can swipe up to get Tingles if you're one of the first people in the morning that views her stories. Laurel drops Tingles in YouTube videos using QR codes that we enable on Roll. Laurel gives Tingles to her top Patreon followers. So people that are, patrons of hers and, subscribing to her monthly $5, $10, $100 a month. And what she's actually doing is creating this interoperable system, this interoperable community that's platform independent. And the fascinating thing there is because of how we've built Roll, Laurel doesn't need to be familiar with MetaMask, Uniswap, or really any of these tools. He's someone that has a following of over 1 million individuals across TikTok, Instagram, and YouTube. And, we're ready for those individuals to come onto Web3 using the tools that we've constructed in Roll. I'll let Sid go a little deeper into, how folks are using Tingles and some of the other social money on Roll as well.
As Bradley was mentioning, so I guess the purpose of, social money really was to capture this idea of social capital, which people kind of have a fuzzy understanding of, but never was tangible. But with the launch of, like Bitcoin and blockchains like Ethereum, like this became a real possibility where the ultimate ownership then is towards the creator and their community, as opposed to most of the value being locked up in the platforms themselves. A big part of the mission that we believe at Roll is to kind of have social money operate across all the platforms. So we don't want to be in this game about trying to predict what the next TikTok is. But what we're interested to do is whatever the next TikTok is, should be able to work with social money. So that's the most interesting thing for us.
One thing that I appreciate about your approach is that it doesn't lock people into a TikTok or an Instagram. It allows them to kind of transport their social platform across, or social capital across platforms. I think that's a nice feature. There's a lot of aspects of these content platforms that are not transferable, and really kind of force content creators to stay with things that maybe don't ultimately serve them in the long term. Let's talk a little bit, I think with something that's this new and this cutting edge, it can be helpful to get really concrete and maybe go through some step-by-step examples of how someone might interact with social money. So maybe let's start with content consumers before we get into content creators and how they might handle, distribution and sort of thinking through token economics. Let's say you are a fan of Laurel and you would like to get some tokens. All right. So you see one of her, you're one of the first people to watch an Instagram video. You swipe up. How are the tokens, the Tingles, distributed to you? Does that need to be done on a one-off basis, or has Laurel automated the distribution of these tokens in the morning?
In that particular story, Laurel uses Roll to quite simply create what we call an earn code. So she'll log on to Roll and she'll actively create a link, a bit.ly style short link that determines uniquely how many people can click this and claim Tingles, and also the amount of Tingles that they can claim. And this is a simple feature, but it's extremely powerful, right? Because this allows Laurel to send Tingles uniquely anywhere she sends a message. So as we're on Instagram right now, Laurel can wake up, say, "Hey guys, really just wanted to say hello. It's a beautiful day. Here's 100 Tingles for the first 10 people that swipe up." So she's created this link on the back end on Roll. The first 10 people that swipe up, in another platform, they may click. And once they click, if they're not already a user of Roll, they'll simply sign up, and Roll generates a wallet on their end that immediately holds the Tingles that Laurel just sent over. And throughout this process, you don't, as we talked about earlier, need to be too familiar with Web3 to get in and start using the tools. So we see Roll really as this way to onboard massive audiences like Laurel's community.
Who's covering all the transaction fees involved in this? Is this something that you guys are doing for free during some kind of bootstrapping period, or bootstrapping of social money, or is someone else paying for this?
Yeah, so a lot of transactions on Roll actually are internal transactions. So it's almost allowing a new form of behavior to emerge on the web, right? Right now you have, hey, I can give someone an upvote. Some of the, again, like in a very nascent from some of the behaviors that you're seeing, like, hey, someone posts something funny, someone posts something good on your stream or on your Discord channel. Like what you will do is you'll fire up Roll and like kind of tip them 5 of your social money. And that's usually happens internally because one of the, I guess the good features of Roll is it usually has all of the power users of that community already on Roll. So you kind of know them by their username. So in those cases, we don't have to cover the transaction fees. But yes, when you're trying to withdraw any of the social money to your own MetaMask address, for example, Roll will cover that transaction fees for you because kind of end of the day, we want to try to abstract that layer of complexity that can sometimes come with Web3 for the more mainstream Web2 audiences.
So Laurel creates a bit.ly link. Instagram sort of handles ensuring that access to that link is only given out maybe one time per swipe or something like that, but she's not personally like generating a new Bitly link for everyone who swipes up. Is that correct? It's somewhat automated. If you have access to the link, you click on it, it goes to your wallet. Is there any way to kind of game that system, or does it seem to be pretty kind of fair in terms of how it kind of shakes out?
Yes, mostly, like broadly speaking, it's one of the tools for the creators is that you don't have to do this for every single person. So Laurel can create a code for, hey, here's 10 tingles for the first 50 people who watch this video on YouTube or something. Then it's a way. I mean, she still has to create that one code, but that one code goes to 50 people.
So consumers of the content click the link. If they already have a wallet with Roll or an account, then there are no transaction fees. If they are creating an account for a good time, if they're creating an account for the first time, also for a good time, there might be some transactions involved on the Ethereum network, but ultimately, maybe someone just got onboarded for the very first time to Web3. So that's kind of a win. Once they're holding those tokens, what can they do with them? What options are available to them within the Roll interface? I guess in a broader sense, what's available to someone now that they're holding, let's say, for example, a Tingle? Where does this go?
Yeah, so the beauty of Roll is that, we'll talk through things that you can do with social money on Roll, particular to, let's say, Laurel. But there's also a whole host of, Web3 applications where you can, leave the Roll ecosystem, leave sort of the Roll platform and use social money elsewhere outside of Roll, and talk about that later. But in Laurel's use case, Laurel's found a really interesting way to give her fans unique access to content if they hold a certain amount of tingles. So Laurel does things like allow her fans to view particular content. So Laurel's also kind of a beauty influencer. She does makeup videos and all sorts of videos you can kind of see on sugar_boogers.com, her Instagram. And if I have a certain amount of tingles, I may really want to see this new Laurel does hot knife videos. So she kind of gets a knife to a really high temperature and cuts really fun stuff like marshmallows and crayon. If you really want Laurel to create content like that, you can have a say in the type of content she creates. And if you want to view it, you could actively view it by spending tingles on Roll. So, we looked at some of the numbers and, just last month alone, about 80 people that actively sort of paid tingles to view content by Laurel. And these are people that otherwise, wouldn't be engaging in Ethereum at all. So that's one specific use case. Laurel actively uses it also as a way to engage with, you could imagine, her true fans. This is something so interesting. The people that hold your social money are largely your biggest supporters, and they want to find ways to help you and support you. And someone holding your social money is largely a signal of that. So that's become pretty interesting. So one thing Laurel does is actively answer questions from people that hold tingles. So they'll spend tingles to ask a question or amplify their voice. Quite simply, Laurel has, 250,000 followers on, Instagram alone and 500,000 followers on TikTok. If she wants to amplify anyone's voice or give them a shout out, they could actively spend tingles to do that. So you're actually given sort of unique access and privileges because you're a tingle holder, something that you otherwise wouldn't be able to get on any platform.
Can a creator burn tokens as well, or is that not available to them at this time?
From our perspective, we have standard economics across the platform. So we have like a 10 million cap of all the social money that's minted on Roll. Ultimately, at the protocol level, we did not want to make a decision on burn because we think like that can be left to individual creators or the applications they're interacting with. So for example, if Laurel does want to burn part of the tingles, just to make the supply more scarce, like she can send it to like a 0x address, but that's something that she'll have to do manually. It doesn't happen at the protocol level.
Let's say someone, has a large following. They're looking at social money as a way of monetizing their audience and monetizing the loyalty that audience has to them. But they also, they need to pay bills, at the end of the day. How do they ultimately end up converting these tingles? Let's say you're Laurel, you've got all these tingles, that you've been paid to answer questions or to create videos, and she needs to convert that into hard dollars and cents. How might she go about doing that?
Actually, the first thing is like even philosophically, again, like because social money is kind of making your social capital a bit more tangible. That is something very real. And, like people know that it's real. So someone like Laurel with 250,000 followers has a lot of social capital on that platform. And like one quick way for anyone really to kind of gain value out of their social money is very simply to reward behavior that's valuable to them. So let's say this month you are in your I need to pay the bills mode. Then what you can do is you can simply reward your Patreon supporters with more Tingles. So some of the cool things that we have seen is, like people tend to upgrade their Patreon membership if they get more Tingles or more of that social money. So that's a very direct way of kind of incentivizing that. But ultimately, again, and maybe the month after, perhaps you made enough that, now you're ready to start investing in something else. Maybe you want to move platforms, right? Maybe you're, again, the next TikTok comes over and you want your biggest fans to move there. Hey, guess what? One of the first things you can do is hey, my first 100 followers on this new platform get even 1 Tingle, let's say. And that kind of rewards them to, shift platforms. So that's kind of, one way to do this. The other way is, again, because these are Ethereum-based tokens and they're, freely available to everyone, you can trade them on an exchange as well if someone's willing to provide liquidity on, let's say, something like a Uniswap. So that can be a more direct way of accessing, kind of being able to sell your social money for real dollars.
The way that money would ultimately, or value would, that someone would be able to sort of, cash out is through hoping that they can create a market on Uniswap, or someone will be there to purchase Tingles in exchange for Ethereum. I imagine that's a bit more of a complicated process. Have you seen that happen though? What are the most healthy, deepest markets for social tokens?
So there's some pretty fascinating things that happen on Roll and in the social money ecosystem that I think uniquely belong to this category. You could imagine, the top supporters on any platform doing the activity that matters most on that platform, right? If it's Reddit, your community's upvoting. If it's Twitter, they're retweeting. If it's YouTube, right, they're, trying to become the top comment all the time. With social money, that activity has largely become being a liquidity provider on your Uniswap pool. So one thing that Roll does, we win when the community wins. So if someone actively wants to have their social money traded, Roll's going to be the first liquidity provider. So we'll actually put in a few ETH, usually along with the creator, and really market make their social money. And what happens next is fascinating. The people that we talked about earlier, largely your biggest supporters, you'll actively see them contribute liquidity as well. And the reason for this is largely twofold. One, they're a supporter and they want to see the liquidity grow and trade volume grow. But two, they're actively collecting fees as well on all the trades that are happening monthly via Uniswap.
So if a creator comes to you and says, hey, I'd really like to make a market here, or I'd like a market to exist, you'll be a market maker in those cases. Is that automated, or is that a bit more of a manual process for you guys?
Yeah, so for us, making a decision from Roll perspective is manual because we're going to put some of our money where our mouth is. At the same time, that being said, it doesn't have to be a manual process in the sense that technically you never need Roll to do this in the first place. And that's, I think, the beauty of the whole, the Web3 and the DeFi ecosystem. You can go ahead and, create a market, be a market maker for your own social money. And, we have seen some people try to go that route as well. What Roll really provides is really try to hold your hand through this whole process. And, we are long all of the social money that's issued on Roll as well. So we do have a direct stake in them. So obviously we want to see them succeed too.
One thing I've often contemplated, there's someone in particular who I know, and I've often said that I'd really love to just own part of their lifetime earnings or, have a piece of their market cap. Unfortunately, they aren't public personas. So there's no way to kind of think about this from a social capital perspective, but they do have a lot of earning potential and they're really smart. They're really smart people. Can the use cases extend in that direction as well? Or are we in uncharted territory at that point and really most everything has to do with audiences and audience monetization for content creators at this point?
What you're talking about in particular is what we're seeing as a really unique way to form a digital community using social money. So there's 140 communities on Roll. You could almost say we've run 140 experiments. And what's happened with one of those in particular is there's a gentleman named Alex Masmej from Paris. Alex had a cause that he wanted to pursue. He wanted to move from Paris to San Francisco. He didn't have the funds to do so, but Alex had a large community. So Alex also has a social money on Roll after, his namesake. It's called Alex. And what Alex actually did is we helped him curate a crowd sale or offering of his social money. And holders of his social money for this particular sale, not only could they sort of get access to sort of some of the rewards that Alex has on Roll, but he also had a sort of agreement to share future revenue as well. This brought in a lot of people. It brought in not only, folks from Roll that are sort of active, supporters of social money, but it also brought in speculators, people that think Alex is going to be, a pretty big founder someday. And if his social money, Alex, was tied to that based on his rewards and future income, this sounded like something they wanted to pursue. So this crowdfunding use case is actively something we're exploring. I would say that we have sort of a growing pipeline of other folks that want to do that. And back to, finding ways to monetize social money and really own the community in a unique way, crowdfunding is actively becoming a use case. So I think you'll actually see this become commonplace in the next few years. The same way you have platforms like Kickstarter and GoFundMe, you'll actively likely see platforms where individuals will have their own social money and crowdfund, either based on causes or maybe even to kickstart a community.
Where do you think value comes from for these tokens? What do you think makes social money, valuable? Maybe you reflect on some of the most expensive tokens on your platform and maybe why they're worth a lot versus others that aren't. What have you learned about value since starting Roll?
One of the big things for us is just think about, again, taking a longer bird's eye view on this whole system. So let's say you were a super early supporter of someone who blew up subsequently. Usually what you get is bragging rights, and that's pretty much the only kind of value you get from that, right? You go to your friends and say, hey, this was this cool band out of Brooklyn, and now they're this big thing. I discovered them way back in the day. But with social money, there is actually, ultimately that value is coming from the success of that community. In a way, if you are an early member of that community and you are long that community, one of our things that we like to say is community as a digital asset. So, in that sense, ultimately the value comes from, hey, what can you do with that social money? And so value comes from two things, right? One, you can probably do many other things in the future than you can right now. So that kind of makes social money valuable too. And the other is, exactly that scenario. Like if you are generally speaking, long a community and, your hypothesis kind of comes true, then let's say the things that you have, so a super simple example, let's say you have like a 30-minute call with someone. If it's just like a college kid right now, that's probably not worth much. But, if you become some world-class founder tomorrow, then, that 30-minute call and his advice is going to be very valuable. It's, in a very intangible way. That's a high level of where value comes from.
Adding on to that, I think some of the interesting things we're seeing are also in the a sub-niche in Web3 that, a lot of folks know as crypto art, sort of provably scarce digital art and sort of the ERC 721 NFT standard. And we have a few individuals, so one in particular, Connie Digital, minted Hue with us. And you could see quite clearly there that the long-term utility of Hue is really going to come from folks other than Connie. And we're seeing that right now. If you actively go to OpenSea and type in all of the things you can get with Hue, you'll see that there's over 120 different ways to spend Hue.
Wow.
Around 24 of those are from Connie himself, so his own marketplace where you could spend Hue on his art. The other 100 are actively from individuals in the community that have set up their own marketplace where you could spend Hue. And this, of course, has nothing to do with Connie. They're just really signaling like Roll, that they're long on social money, in particular, Connie's work. So you can really see the future of social money. Imagine the most influential person you can and them issuing their own social money. The utility is really going to come from the community overall that supports them. And you'll actively see tools, applications, and even other platforms that enable that.
Let's talk a little bit about underlying technology. So you've mentioned Uniswap, you've mentioned Ethereum and ERC20 tokens. Is that pretty much the stack? What else is involved?
Yes, I think going all the way from the bottom. So we have a suite of smart contracts that will issue your own ERC20 token. So we have like one gatekeeping in the sense of your token does have to be approved by the Roll team. And once that's approved on the blockchain, then we go ahead and create that ERC20 smart contract for you. What comes out of the box with Roll is the economics are standardized across all creators. This may seem like a small point, but it's extremely powerful when you're thinking about network effects. So as Bradley was mentioning, so we have Connie Digital, who minted Hue as one of the first crypto artists to have their own social money, right? And right now we have over 30, 40 crypto artists who all have their own social money. But the mental bandwidth required to understand any other social money is extremely low if you hold Hue, because the economics are pretty much the same. So you don't need to do any mental math in your head about what percentage of what does 100 mean in this case. So like a high level, the simple economics on Roll is the maximum supply is 10 million. 2 million are issued on day one, and the rest kind of vest over a period of about 3 years. And that's kind of standard across the platform. So that like really provides like a lot of standardization benefits.
Hey, I wanted to pause for a second to let you know that this episode of the Flippening Podcast is brought to you by our longtime and trusted partner, Nexo.io. As someone who personally uses Nexo, I wanted to point out a few things that I especially like about their crypto-backed loans. First, when the price of your collateral grows, so does your credit line. Let's say that you borrow against your Bitcoin when each is worth $5,000, but over the course of your loan, the price grows to $10,000 per Bitcoin. This means that the size of your credit line just doubled as well. I personally haven't seen anyone else doing this. A second thing that I really like about Nexo is that you only pay interest on the amount that you borrow. I've seen Nexo competitors require you to take out loans and force you to withdraw the entire amount. With Nexo, you get a credit line and can withdraw the funds that you need and not a cent more, paying them back whenever you want, with interest assessed daily. Again, this isn't something that I've seen any other providers do. The final aspect of Nexo I'd like to highlight is that they give you the ability to borrow against a basket of crypto assets. For example, if you post BTC, ETH, and BNB as collateral to your Nexo account, the Nexo Oracle calculates the real-time market value of those assets and adjusts your credit line accordingly. Again, to my knowledge, other providers in this space only allow you to borrow against one asset per loan. This episode is also brought to you by CryptoTrader.tax. Without them, we wouldn't be able to provide this content free of charge. CryptoTrader.tax makes the excruciating task of reporting your cryptocurrency gains and losses a breeze. Indeed, sorting through transaction records from your exchanges and reporting each trade in US dollar terms is not how most crypto investors want to spend a weekend. CryptoTrader.tax is a software platform that automates the entire cryptocurrency tax reporting process. It's basically like TurboTax for cryptocurrency investors. All you have to do is connect your exchanges and import your trade history into the platform. CryptoTrader.tax will do all of the number crunching and spit out your auto-filled tax reports with a click of a button. Simply give these generated tax forms to your accountant or even import them into your preferred tax filing software like TurboTax or TaxAct. You can join more than 10,000 crypto investors who are automating their crypto tax reporting with CryptoTrader.tax today. Creating an account and importing your historical data is completely free. You only pay when you want to download your tax report for the year. Just tell them that Clay from the Flippening Podcast sent you. That lets them know that this advertising is working, and it also gets you a discount on your tax reports. Finally, this episode is brought to you by the startup that produces it, Nomics.com. Nomics is a crypto market cap website and aggregator going head-to-head with CoinMarketCap. We stand as a transparent alternative to many of the sketchy market cap websites out there. We won't name names, but I think you know who we're referring to. Anyway, if you haven't been to Nomics.com in a while, I encourage you to visit our website. We offer transparent volume statistics for nearly every cryptocurrency and crypto exchange in the space, and I believe we have the only credible crypto exchange index in the space as of this recording. If you're sick of scammy ads, bad design, and manipulated data provided by companies whose founders hide from public view, then check us out at nomics.com. Okay, let's return back to the show.
a big part of the market that we are going after is your traditional Web2 audiences as well. And this is pretty important because even if you are a creator or an artist who is very well versed in Web3, chances are that you have people in your community who are not Web3 native. So there are people in, like, taking Connie's example again, like Connie's very well versed with, using MetaMask and, Web3 in general. But many active community members are just in this for the art, not for, the crypto side of things. And so you don't want to try exclude those people, right? And that becomes like way more prominent when you go to someone like a Laurel, for example, who's more Instagram native. And so we do have a web app that's available on the web, and we have an app on the Apple App Store and on like the Google Play Store as well. Which just makes this whole process very, very seamless. So we do have like backend services there, and then like a front end apps as well that you can use to interact with social money.
Let's talk a little bit about OpenSea. Can you walk me through that model there? You mentioned someone who was using OpenSea to provide a whole bunch of different, a variety of rewards for owning the tokens. How might a creator think about the various options or sort of creating utility value around owning a token?
Yeah, so for the crypto art community, the first step is, so someone like Connie Digital, for example, is an artist. And one of the things that he does is there's his own art that's for sale. So you can think of one-of-one editions, and this is provably scarce on the blockchain. And crypto art is a very niche but pretty fast-growing category. And he's signaling here that he's foregoing ETH and DAI and actually only accepting payment in Hue. So these are all pieces that he would like to go to his biggest community members, right, as opposed to just the general public. And so what OpenSea really does is it's a marketplace for NFTs. You can buy a lot of these NFTs using ETH or DAI, but they also have the way to integrate just any ERC20 tokens. So I guess this also is like the benefit of the tech stack, right? Like just building on Ethereum, something like an OpenSea integration comes very naturally. This doesn't have to be like a whole project in and of itself, because someone like OpenSea can support social money as a payment mechanism. And we're seeing that. So again, that's like the first level of it. Now, the second level, as Bradley alluded to earlier, like a lot of value comes from marketplaces that are no way related to Connie directly. So Marble Cards is a good example. So it's like a trading card game that's, you can build like collectible little generative art pieces for any URL on the web. So almost like a very artified bookmarks, and along with some other games that come with that. And there's like a small team out of, like a Swedish team that's, just built like a pretty small, but, like a really passionate and engaged community. And you can buy Marble Cards today for Hue on OpenSea. And again, like this is not a project by Connie, right? This is a completely separate company that has built this out. They really see the value of social money, and they see higher trading volumes when things are listed for social money as well.
So maybe we'll transition to talking about Nomics and the NOM token. So we recently signed up. We've got this NOM token. It would be fun to have a little workshop or a live coaching session where you guys can help me think through what we should do with these Nomics tokens. So we've got, I think, 2 million now that are minted. I've thought about a bunch of different things. One is if you sign up for for our newsletter, our daily newsletter, maybe you get a token. If you leave a review for the podcast, maybe you get a token. And there's a bunch of things that I think we can do to give these tokens value. One thing I was thinking about doing is sort of, giving shout outs on the podcast to people who pay a certain number of Nomics tokens. It would almost be like a mini ad. The average episode is getting over 30,000 downloads. So I think people would definitely hear that. We also have remnant ad inventory on nomics.com. So, maybe you could have your ad shown for an hour or something in exchange for handing back a certain number of tokens. We also have our paid API. We prefer to get money for that. But, I think if you had enough tokens and we sort of thought through the economics correctly, there might be something here. So I guess with that kind of context given, what do you think I should do? What would you advise me to do with our newly minted fancy token?
Yeah, so I would say the first thing we generally do is send over a quick email with something we call a social money handbook. This sort of covers, all of the things people have done and just a blueprint of what you can do with social money. The very first thing I think you should do, since you guys have a pretty awesome presence on Twitter, is really just announce it. Take advantage of the cool, clickable Twitter cash tags and just use that with hashtag NOM and just announce that you guys are part of the social money ecosystem. Make sure to add us so we could retweet. From there, people are instantly, you're broadcasting to, a lot of people that you now have your own social money. And they're going to be, it's going to draw out those natural true fans that we talked about earlier, folks that are going to be like, how do I get NOM? When is NOM going to be listed, et cetera? You could actively talk about ways to earn and spend NOM there. I think some of the things that you mentioned earlier are fantastic. Yeah, if there's ways to do shout outs, we've seen that work on podcasts and also on various social platforms. And then you could almost think of NOM really as a way to supercharge any sort of, let's call them KPIs that you guys want to enhance. This is something we see across categories, right? So Sid talked about art earlier. People are actively giving social money for highest bids. We have a streamer audience on roll. So people are, giving away social money for subscribing and, virtual gifts like Twitch bids. So just flipping it back to you, what are some of the things you want to, increase KPI wise in the Nomics universe?
I think a lot of it has to do with going to the website. I think that we've got some pretty sketchy competitors, and I think we're doing some really innovative stuff around transparency. A big piece of this is just kind of the muscle memory around navigating to certain websites to get crypto data. And so we kind of want to break that habit. And so something that could be interesting is we could reward people for just, visiting the site on a daily basis. I think I'd be sort of concerned about scalability of that and how much time that would take. I'm in the portal right now. I'm in the roll portal. Where would I go, or what would I do to kind of think about automating, rewarding people just for visiting the website or coming back frequently?
Yes, actually, just adding on to what you said, like a super fun way we have seen some people be really innovative in the crypto art space. So Connie Digital did this a lot when he wanted people to visit his VR galleries in crypto voxels, which is like a VR gallery built on in Web3. And one way he would do that is he would hide his social money somewhere cool. So you actually have to go and look at the gallery before you could find that social money. So if you actually want people to navigate in the website, what you can actually do is you have a lot of these pages here in the products, resources, bunch of other places. Just hide social money somewhere. Let people go ahead and have fun and try to find them.
It's almost like economic Easter eggs or economic scavenger hunts. How would I generate the link? I'm in the portal. I can send NOM to someone. It looks like I can send, receive, but in terms of maybe generating one of those links that Laurel creates, or sort of automating this, what kind of automation is available there? Just kind of thinking about taking this forward, or is that something you have to unlock in the UI? Is our ability to do this, or do we need to think about smart contract development, or bring in a technical team member to really make this happen?
No, so actually Roll makes it super simple. So if you're in your admin portal, you'll have an admin section on top along with your wallet, send, receive, and history sections, which everyone else sees as well. So what the admin section really does is it tells you how much social money you have, and also gives you the ability to manage two sides of your NOM economy, basically. So earn is the way in which your community can earn NOM, let's say doing things that are valuable to you. And then rewards are things that they can get from their NOMs once you have NOMs. So, is it a podcast shout out, or is it like a newsletter shout out or something of that nature? You can literally click on new way to earn, and, it'll just ask you like a basic title just to make things easy for you to remember what you use it for. So let's say you're doing something like an Easter egg for the website. And then you may put in there, like, how many people do you want to be able to earn that NOM? Let's say it's, 50 people or 25 people. And how much NOM. So again, that kind of depends on the total supply and how much you have, right? So you have 2 million in your wallet right now. So it can just be a fun amount that you want to play around with. So let's say 100 just for like the super early adopters. And so now the website should tell you like that should be a total of 2,500 NOM in this example. And as soon as you go ahead and create that link, you will get a unique link that you can then embed anywhere on the website, really.
Nice.
The people who go and click on that, like the first, according to whatever the parameters you have set. So in our example, 25 people getting like 100 NOM. So the first 25 people who go ahead and find that link and sign up to roll will have all the NOM in their wallet. And then they're free to do what they want. So for example, if you already have the reward set up, if there is a reward for just 100 NOM, they can immediately go ahead and redeem this. Or let's say the lowest reward is 1,000 NOM. In that case, they'll look for more of these Easter eggs. They'll follow you on Twitter. They'll ask you for more ways to earn NOM. Perhaps they even do something good for you. Maybe, we have seen people do like fun little projects like, hey, I'm not an artist, but if someone creates a logo for me, I'm going to give them X amount of my social money. So many like fun collaborations that you can do in the social money ecosystem. And yeah, like that's basically your earn code. And then rewards is the same thing you can set up. We actually have templates for shout outs directly. So you can literally create like a template for a podcast shout out in like 2 clicks from there.
Hi, this is Mike cutting in to explain how you can grab some NOM. Here's an Easter egg for you. We're giving away 20 NOM to the first 10 listeners who go to flippening.com/NOM. Again, go to flippening.com/NOM to snag 20 NOM tokens. These 20 NOM can be redeemed on roll for a Nomics t-shirt or other prizes we make available over time. We're excited about launching our social currency and look forward to hooking you up with some fresh NOM and Nomics gear when you go to flippening.com/NOM. Okay, back to the interview.
One thing that we've done recently on Nomics is we started listing these social tokens. I am very invested in having a priced Nomics token on nomics.com. If I wanted to ensure that happened, so that we could have some value around this or some price discovery, what would I do? Would I just go to Uniswap and place some open buy orders with Ethereum? How would I go about generating price discoveries that our Nomics token actually has a price associated with it?
Yeah, so normally the way we suggest people do is like let the economy play out for a little bit without an actual dollar exchange. What that really tells you is like it'll give you, well, one, it kind of shows you that the token's valuable even without an exchange, right? Because people do like the rewards that you have put out for NOM. And the second, like bigger thing is it kind of gives you a sense of value and how valuable the community finds NOM to be. So if you even like run, like a few earn and rewards on your side, even if it's for like a week, let's say, they'll just give you a lot of insight into what the market should be. And from there on out, it's just it's a conversation where, we can provide some liquidity for the NOM token on Uniswap as well. But basically on Uniswap, you need to come to an approximation of what you think the price should be, because you are going to be the first market maker for NOM. So you basically get to set the price. And you want to be intelligent about this, because if you are, let's say you're way off, then, there's a whole bunch of professional traders who are trading against you. So, you don't want to misprice it too much, right? If you price it too highly, then people will just dump the NOM for the ETH that they get. If you price it too low, they might just want to buy up everything that you have there on supply or close to that. So that's like a tricky step. But once you have that, that's pretty much, determines the first, the kind of the market price of the first trades. And from there on out, the community can decide, right? Like if they think, they find the price to be fair, they can be liquidity providers and they can start earning fees as well. Or, they can also start earning more NOM or, just buying up NOM from that Uniswap pool.
Makes a lot of sense. And these tokens, because they're ERC20 tokens, they can be held literally by any Ethereum wallet that holds ERC20 tokens. Is that correct? So, my crypto, your Trezor, your Ledger Nano, all that works for holding these tokens.
Yeah, absolutely. That's like a big part of our vision. So when we originally talked about kind of social money being platform agnostic from like Facebook, Instagram, guess what? It should also be platform agnostic from Roll. And these are like ERC20s are interoperable within the entire Web3 ecosystem.
If you guys, God forbid, got hit by a bus, this whole thing, maybe the UI wouldn't be there, but the value of the tokens, your ability to hold them, things would sort of move forward. Maybe someone would take over protocol development or smart contract development, but things wouldn't be over, essentially, if you guys got hit by a bus, right? This is fairly decentralized administratively, or is that something that's coming in the future but not a reality just now?
Yeah, so NOM is the ERC20. So whatever happens to Roll, if Roll gets acquired by some company or there's some sort of shift or change, NOM will always be there. And you could actively eject your NOM to your, MetaMask Trust or Treasure Wallet, like you said.
Let's transition to talking a little bit about the prehistory for social money. Were there things like this happening before you started Roll? Where did you draw inspiration from? And what type of things like this have existed prior to your starting this really cool company and movement?
So I think we actively saw what we're doing now as a sort of end state, right? This is where sort of like creating communities that, can become platform independent and own their own economics is something that's very different than what we saw in the past 10 years. And there's folks like Chris Dixon that kind of write a lot about this. He wrote a post called Why Decentralization Matters about this idea of platforms eventually just competing with their users. And you saw something like this with Instagram, really, with them, getting rid of likes, because that was sort of a metric or currency of that platform that allowed users to basically disintermediate Instagram and just kind of grab cash to, do a sponsorship or something like this. So now you sort of have to, most people have to go through Instagram directly. This concept sort of changes that. There's sort of a brief history of folks, that have issued their own blockchain-based, call it personal currency in the past. There's always been a lack of a network there, right? You may have, someone in 2013 or 2014 or 2015 that has done something like this, but there's never been a network surrounding it to actively hold someone else's social money. You would need many tools, let alone, sustaining that social money over time. With Roll, there's sort of this floor here, right? There's this network and understanding that it becomes very easy to, create and move social money across the web. I think one thing we're seeing that's pretty fascinating, and this is something I like to talk about, is this idea of where user-generated content is now. We all understand the platforms behind user-generated content and the idea that they've amassed sort of this annual market size in the hundreds of billions. And platforms like Twitch, YouTube, TikTok, etc. And this was kind of unfathomable in 2010. A lot of folks missed out on opportunities like this. Now with Roll, you can sort of reimagine this category via the people that create the content instead of the platform. And that's really the beauty of what we call social money. You could also think about it as, user-generated currency. So two massive categories coming together, fintech and social, and creating this entirely new market. And in a nutshell, this is Roll, and this is what we think is a massive, massive opportunity, likely on the scale of user-generated content.
I think once you start minting tokens, a lot of interesting questions arise. Like, once there's price discovery, do I have to declare this as earnings on my taxes? Things like that. Is this a commodity? Is this a security? Is this a currency? What are some of the most kind of frequent questions that you guys find yourself answering from creators around the nature of this new thing? And then how do you go about answering those questions?
Before we started the whole, the company, we didn't get, like a legal opinion on everything. And at a super high level, the conclusion was as long as the tokens have formal utility, they're kind of similar to your loyalty points. That's kind of how we think about things at Roll as well. But, but we're pretty much in somewhat uncharted territory here. That's kind of how we think about that.
So, in terms of frameworks that we're used to, would you say this is more analogous to like maybe a utility token than anything else? Or do you think there's a better analogy to be made here?
I think it's very similar to, as Sid mentioned, airline miles or loyalty points. I think the punch card analogy is very apt as well. And, for us, we've kind of been students of the space over the past 5 or 6 years. What's most important, in addition to the utility, is also how it's marketed. So when you go on Roll, you'll see that social money is earned. And, social money is spent or redeemed for rewards. So we borrow a lot of the language from the loyalty category just to really concretize and frame this idea that social money exists in a digital loyalty category.
Let's transition to talking about your company, if you could just run through where you're located, team size, what you can share about, maybe the number of active wallets that hold social money.
Yeah, I can walk through the company stuff and then Bradley can take over. Yeah, so we're about 6 people right now. So Bradley and I as co-founders, and then we have a distributed tech team as well. So we kind of made some pretty early investments actually, which we got lucky then because we found some really talented developers from all over the world. And, before the whole COVID situation as well, we were mostly remote, even though we did have like a co-working space in New York that we would sometimes go to. In terms of the tech team, we were pretty set there.
So you're a distributed team, about 6 people. Yeah, what can you say about usage metrics? Number of tokens minted or number of sort of unique ERC20 types, like how many people have created tokens on your platform and how many wallet addresses hold those tokens?
Yeah, so we're at about 140 communities who have created their own social money on Roll at the moment. So seeing pretty good growth there. In terms of wallet metrics, so some of them do live on Ethereum. So, you can find them on Etherscan and you can go to like the holders tab and kind of see some hundreds of addresses. Some of them, which are especially for people who are a bit more on the Web 2 side, you won't see those on-chain metrics because Roll handles a lot of the transactions internally. So we kind of have the whole philosophy of progressive decentralization where you can start off putting everything on Roll and then slowly over time, it kind of gets distributed into the whole Web3 ecosystem. So some of that can be hidden if you just look at Etherscan data.
And how do you plan on monetizing or generating revenue?
How we think about that as Roll is also, it's present and also future facing. So we only win when communities win. If NOM becomes the biggest thing in the world, both Roll and Nomics sort of win, and that becomes very exciting. And Roll is really out to make that happen in sort of a utility perspective. So anything we can do to empower or spread sort of the NOM community or sort of any other social community that exists on Roll, we do so because we're an active holder of all the social money that exists on Roll. In the future, you could really imagine this as a category, as we talked about, similar to DeFi with its own specific uses. And in that category, you may see creators and communities have their social money, move across platforms, whether that's, moving from Twitch to Twitter to Telegram to Uniswap to, Shopify. We really see Roll as the rails or PayPal for social money, if you will, that allows this to easily happen. If you're imagining this at scale, right, maybe you could imagine popular authors or books or movies or late shows or brands, having their own social money. You could imagine millions of touch points happening, let's say every day or week. And, at scale, we may consider, charging a fee for transactions. So certain touch points where companies may interact with folks on sort of a massive scale. This is potentially a way for Roll to make money via fees.
So basically turning on revenue is probably something a bit out in the future, but once this ecosystem is active, there's probably lots of venues for generating revenue. You mentioned that Roll is a holder of these social tokens. When tokens are minted, do you guys take some kind of cuts, or is that something that's happening right now or something that you envision happening in the future that sort of, you come in, you create 10 million tokens, maybe 1 million goes to Roll. There's something like that.
On Roll, all the social money that's minted, we actually hold 12% of the social money that's minted. And we use this for a variety of ways at the moment. So we use it to bring more people into the community, right? So take NOM, for example. One of the things that we would love to do is, say the next newsletter that we write, or like the next investor update we do, we'll drop in a link for some of our NOM that's not coming from your wallet. It comes from our wallet. So saying like, hey, if you're, check out Nomics, it's this awesome website. Here's 50 NOM to get you started. If you want more, find the cool ways to earn more NOM. And kind of like that, what that allows is allows us to introduce our networks to all of these other social money communities that exist on Roll. Now, one of the other things that we do use the social money, the part of the fees is to make markets. Because as you know, if you want to provide liquidity on Uniswap, then we need both the tokens and Ether. So that's another a big use of what Roll uses those 12% of the tokens for.
When you guys peer into the future, what are you most excited about? What do you see as coming next? Obviously, you've created some really interesting tech and it's not just the tech, it's the ideas behind it and the economics behind it. And so I'm sure there's plenty to do just catching the world up to this potential new way forward that you've unlocked for everyone. But, when it comes to product roadmap, what are you most excited about coming in the next 1 to 2 years?
So I think this is going to trend towards very influential people and communities, not only getting familiar with role and social money, but also getting familiar with Web3. Back to sort of that Laurel conversation, this was sort of her first touch point with Web3 to create Tingles, because this is something that made sense. And it was another way to sort of speak to her community. As we see this as a new category, there's many parts of the puzzle that, we're unable to see because we're really just focused on the infrastructure. But there's likely some incredible applications out there that developers can think around and build. So actively, what we're in the process of doing is really opening up our APIs to third-party developers that can build nearly anything that utilizes the communities we've built around social money. You could think about this in sort of categories, right? So Roll does a few things. We mint social money. We're the rails that move social money. And right now we also have a way to spend social money. You could actively think of unbundling some of those things. Maybe it may make sense to create a minting product where you could mint a token for your party this Saturday, or a blog post that may be something that people want to do that's very different from sort of how we think about social money. Maybe there's a time-based auction market that you may want to use to spend your social money in an eBay style auction way. That's something we'd love to see. Maybe there's a new version of Twitter or Reddit that can just exist around your social money. Or maybe to view a certain post, you need to hold a certain amount of NOM. And maybe the long-term activity there, it's memes, it's videos, it's messages, and it's people from all over the world engaging in content via NOM. We want to create a world where this is very easy for developers to come into our ecosystem and effectively create the future of social money.
There's one question I ask of every single guest, and that is if you could wave a magic wand and do something instantaneously and altruistically for the crypto community, what would it be? Let's start with Bradley. If you could wave a magic wand, what would you do for the space?
Unfortunately, part of what we do at Roll is go out to people who otherwise wouldn't be using digital currency and Web3 and really onboard them. And we've really seen this sort of, pushback against the words crypto, against the words blockchain, against Bitcoin. All they really see is, what happened in the headline a few years ago, or some volatility. They're instantly fearful. And it really pushes them away from understanding the philosophy of blockchain. So for me personally, I think it'd be cool if everyone kind of understood the philosophy of blockchain and Web3 and sort of what the space is all about, instead of sort of this number go up, number go down philosophy, which we're kind of seeing.
Yeah, for sure. Sid, how about you?
I think somewhat related. I think sometimes in this space we get too caught up in the technical and financial aspects of things that you kind of lose that human touch. So I wish everyone in the space really understood who those end users are who are ultimately using your product.
That concludes Clay's conversation with Roll co-founders Bradley Miles and Sid Kalla. I hope you enjoyed it. Before you go, I want to invite you to subscribe to our fully customizable daily crypto newsletter. It's the first of its kind in the industry. You choose the delivery time and cryptocurrencies. We ship tailored pricing data and market news 7 days a week. It's a great way to cut through the noise and drill down to the crypto market info that matters most to you. To subscribe, go to news.nomics.com. Again, that's news.nomics.com. All right, that's all for this week. Stay tuned for next week's episode. Until then, take care.
That's it for this week. To sign up for our free crypto investing newsletter, listen to other episodes, or get the show notes from this episode, please visit flippening.com. I also invite you to check out the startup that funds this podcast, Nomics, spelled Nomics, at nomics.com. Finally, if you got value from the show, the biggest thing you can do to help us out is to leave a 5-star review with some comments and feedback on iTunes, Stitcher, or wherever you listen to podcasts. Thanks for listening, and see you next week.